Hey guys, what is going on? Welcome into the video. So over the past week, we had quite the week in the stock market with the indices having some pretty major declines. Just take a look at some of these numbers. In just the past 5 trading days, the S&P 500 is down 5.7%, the NASDAQ 100 is down 6.9%, and the Russell 2000 is down 7.95%. So the question now is, are we nearing a market bottom or is there more pain to come? Well, let's talk about a couple of things. Historically, a lot of the stock market's greatest moves have came right after bear markets and market corrections. Think about it like the further the market goes down, the further a spring gets coiled, more potential energy when the market does bottom and reverse, making those moves just that much stronger. The more downside that we see now is the more future upside that the market will have. Now taking that into note, this chart shows how returns on the S&P index would fare if you missed the best days in the market, a lot of these being right after bear markets. So 9.9% return if you missed none, 5% if you missed 10 of these days, 2.1% if 20, and then it gets into negative return territory on over 30 days missed. When trying to time the market, you put yourself at risk of missing out on those huge bounce back days, those days when the market bottoms, maybe the S&P goes up 2-3%, maybe those heavily beat down growth stocks bounce back 10, 12, 13% plus on a day like that when the market does bounce back hard. So now talking about timing the market, trying to sell at the top and buy at the bottom. Most of the time, this is a losing game. You have to time both of these things perfectly. You have to time selling out at the right time, and you have to time buying back in at the right time. 99% of people who try this will fail at this. So telling a personal story about myself. So in 2020, I literally timed selling perfectly before the COVID crash. So I saw the COVID data in China, figured there was a chance for it to get to the US, and if that happened, it would be an absolute disaster for the market. So I personally sold everything in the mid to late February timeframe, and I think I took about a 5 to 10% haircut overall, but nothing close to the 35% plus drop in the indexes and 50% plus drop in most individual stocks. Look, I thought I was a genius. I figured I would go heavy into travel stocks when the time was right and make a fortune. Well, as we know, the market bottomed in the middle of March and had quite the bounce back. Stocks like Boeing, ticker symbol BA, for example, when the market bounced, this had over 100% move in a span of just 4 trading days, moving from $90 per share to a high of $186 per share. So in just those 4 trading days, it averaged a 25% return each day. That's the bounce back potential that some of these stocks have when bottomed. So getting back to the story, I had some successful trades during all the volatility, but it took me until early May before I actually trusted the bounce to hold and fully get back in the market, which was after all of the major bounces took place. Also, about a month and a half later, I, like many others, thought that we would see a double dip crash. COVID cases were through the roof once again, economic data was scary, and there was just a ton of FUD out there, fear, uncertainty, and doubt. So I sold most of my holdings at that time and bought some puts, betting on the market to go back down. So of course that second dip was very short-lived, and the market continued its march higher. During all of that, of course, I personally ended up losing money on shorting the market, buying those puts, and also opportunity cost as the market continued higher, and I continued to miss out on those potential gains. So this taught me some big lessons. Sure, we can say that the COVID crash was an outlier in many ways, but 99% of us are not smart enough to time the market or predict what will happen next. So there's a crazy amount of fear out there right now. One of the largest financial YouTubers, you could say he's the largest based on views, Meet Kevin, decided to sell out 99% of his $20 million plus stock portfolio because he thinks the market is headed lower and he plans to try to time it near the bottom for the move back up. Now, I'm not here to shit on Kevin. I don't think anybody should be giving him shit for his decision. I have mad respect for him, and he obviously has strong conviction that the market is headed lower and is confident in his timing to buy back in. Look, maybe he's a genius and this is a great move, or maybe his decision will age terribly, but overall, that's just a ton of FUD for the hundreds of thousands of viewers, and honestly, maybe a contrarian indicator that we're near a market bottom. So for those who don't know, a contrarian indicator is essentially an extreme in market sentiment that can serve as potential turning points where bullish or bearish momentum will break out and start moving in the opposite direction. For example, Kevin has been so bullish this past year, he finally turned bearish, he finally gave into the fear. Maybe that is the indicator for peak fear right before the market bottom. Now, of course, that's just speculation. Who knows what's going to happen? The market can easily go a lot lower. But that's just something to note right now. There's a ton of fear going around, even for some of the biggest market bulls. As soon as it seems that all hope is lost and the market is guaranteed to go lower, there's no hope for it to bounce back up, those tend to be the times where the stock market bottom is near. Let's zoom out to the historical chart of the S&P 500. Historically, as long as you're buying good companies, nobody has ever regretted buying and holding during market dips. These are just discounts before these stocks end up going higher in the long term. We are now in the last stage of the crash, in my opinion. So first came the speculative stocks that topped in February 2021, crashing, such as SPACs, SPAK, this is the SPAC ETF, kind of shows you the crash that we had in SPACs. Genomic stocks, using ARKG to show this. All of these genomic stocks have crashed since then after topping in February of last year. ARKG shows a great visual of that. Next came growth stocks, and especially high valuation growth that everybody thought was untouchable based on their strength and price action. Cloudflare, ticker symbol NET, stock that everybody was thinking was untouchable. Nobody was worrying about the valuation last year. Shopify, same thing, ticker symbol SHOP. Trend is finally breaking to the downside, down over 10% just this past Friday. Unity Software, ticker symbol U. Same thing, everybody was so excited with the potential for this company in the metaverse. And now look where we are, the stock is down 50% plus off of highs. And now we're in the final stage of the crash where mega caps and so-called blue chips are getting hit. Amazon, ticker symbol AMZN, taking an absolutely massive hit recently, including a 5% drop just this past Friday. Apple, ticker symbol AAPL. Microsoft, ticker symbol MSFT. Google, ticker symbol GOOG. All these companies that seemed untouchable finally getting hit. And also Netflix, ticker symbol NFLX, crashing 20% plus on Friday after their earnings miss on Thursday. Right, so it makes sense. We've gone through the speculation phase, the growth stock phase, and now we're in the blue chip / mega cap stock phase crash, something that has historically been seen in these stock market bear cycles. So now the question is, how long does this part of the cycle last before the stock market bottoms? Maybe it takes a couple months, maybe it takes a couple weeks. Maybe we bottom out next week after the Fed meeting on Wednesday. Maybe Powell shifts his tone to dovish. Who knows what's going to happen though? The truth is, nobody knows what's going to happen next in the stock market. Trying to time the market, it's almost always a losing game. There are certainly a bunch of trading opportunities in this environment with all the volatility. You can play the downside on trades by shorting or buying put options, just like you play the upside in bull markets. With day trades, quick swings, whatever your trading style is, there's always trading opportunities in a market like this. And long-term wise, in my opinion, not financial advice, of course, I think the best move is just dollar cost average into companies that you have the strongest conviction in. And over the long term, you will not regret those decisions as long as you're buying great companies. Nobody's ever regretted buying a great company on a large discount and holding long-term. Those long-term buys will be paying off big time in my personal opinion. So that's it for the video, guys. If I provided some value to you, make sure to hit that like button and subscribe button. It helps me out a ton and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that's the first link down in the description. You get all my trade alerts, buys and sells, including long-term buys, nightly watch lists. I answer any questions you have and more. That's the first link down in the description for anybody interested. And thanks so much for watching. And thanks so much for watching all the way through, guys. It means a lot. I greatly appreciate that. I'll catch you guys next time. Stay safe in this market. Don't make any decisions you'll regret. I'll catch you guys next time. Stay safe out there. Peace out.